Hello, this is a video tutorial for Hands-On 7 where you will learn how to create a new case study for a nuclear power plant. So, following the hands-on exercise, we need to create a new case study for a nuclear power plant. So we will use this box on the right here, and we will name our case study Nuclear Power Plant Demonstration. Our case description will be hands-on 7 case study on a nuclear power plant. And we click on create case study to create. And now we have our new case study, which is listed over here. And we'll click on this and we'll fill in the other information. So we have been told that the nuclear power plant has a start year of 2018 and an end year of 2060. The study type is a single plant and the local currency is local currency and foreign currency is US dollar. So we drag and we drop and we click save. Now we will move on to inflation information. From the economic information, the hands-on is telling us that the US dollar will have an inflation rate of 2%. So we click on steady rate and we put down 2. The local currency will also have a steady rate and it will be 4%. So we put down 4 and we click on save. Now we go to currency exchange rates. And the economic information from the hands-on is telling us that the exchange rate is 3.75 units of local currency per USD for 2017 and 2018. An exchange rate reflects inflation rates. So we'll click on the second option here, exchange rate reflects inflation rates. And we will put down for the years 2017 and 2018, 3.75. And now we click on save. Now we have finished our general data section, so we will have to click on the next section, taxation data. So the hands-on is not telling us anything about declining balance depreciation rate for assets of 2017, so we will leave that blank. The hands-on is, however, telling us about VAT. There is information about VAT. And so in the economic information section, it tells us that income tax is 20% with losses to be carried forward and no losses in the start year. So we click on tax loss should be carried forward, no losses in the start year. So we put down 0. And our income tax is 20%. It actually doesn't tell us anything about VAT, value added tax, so we will leave that section blank. Yes, it doesn't tell us anything about VAT, so we will leave that blank and we will save data. It also doesn't tell us anything about royalty payment, so we'll leave this section blank. And now we move on to assets and liabilities, which is under the initial balance sheet. Now let's check if there is data on assets and liabilities. It doesn't seem like there is information on this, so we will leave this section blank. There's also no information on old commercial loans or old bonds data or committed investment data, so we will leave this blank. And now we move on to sales and purchase data, and we'll click on this green plus symbol to add in new data. So we know that our nuclear power plant will be producing electricity, so we will click on electricity. Our client, for this sake, we will just name utility. Currency will be in local currency, and the price for the first year we have been told is $0.3 for local currency, so put down 0.34. Quantity, it is telling us that the plant will generate 7,450 gigawatt hours from 2029 onwards. So we will have to save this data first and go back to edit it. So this is the same page, but for 2029 we need to put down 7,450. It is also telling us that the price increases with inflation, so we will click on standard change in addition to inflation. Let's have a look. Let's have a look if that is correct. Yes. So because there is an addition, we'll put down 0. This will ensure that the price will increase with inflation. And now we click on save. So we haven't got any information about purchase data, consumers' contribution and deposits, or fixed revenues and other incomes, so we'll leave these sections blank. And now we move on to plant data. And again, we will have to click on this green symbol to add some more data. So the name of our plant, we will just name it a nuclear power plant, so NPP for short. Our plant type is indeed nuclear, so we'll click on nuclear. Status is future, ownership is utility, and our unit size, we're told, is 1,000 megawatts. The first operational year is 2026, we are told, 2029. And the construction period is 8 years. The plant life, we are also told is if we can find it, 40 years. And the product will be electricity only. So we click on electricity and we click on save. And now we go back and we edit it and we go to plant production. We are told that the power plant will generate 7,450 gigawatts from 2029. So over here we put down 7,450 and we click on save. Now we move on to the O&M costs. We are told that O&M costs are expected to amount to 450 million local currency, so we put down 450. We put down 0 over here for US dollar. As the units are already in million, we don't have to put down million, we just have to put down 450. We click on save data. Now we move on to fuel costs. And it says here that fuel costs amount to 69.5 million USD. So put down 69.5. And again, 0 for local currency. And we click on save. Now we move on to general expenses data. And we can see actually that there is no data related to this, so we will leave this section blank and we'll move on to the next, which is investments. And we are told that the plant will cost 5,000 million USD, so we put down 5,000 over here. And it is expenditures are distributed by 5%, 10%, 20%, 20%, 15%, 15%, 10%, and the last one is 5% over the construction period. And so with this, we will click on save. We were not given information on local currency, so we'll leave this section, this half section blank, and move on to sources of financing. We're told that there is, well, in the financial information, we're told that there is 68% export credit over 18 years. So first we need to click on this, which will let us put down values and data for an export credit. So we will put down 68% for all of these years. And we click on save. And now we need to go into terms of financing. So we click on this green box here. And we are told that there is a 68% export credit over 18 years. So we put down 18 for term with uniform principal and interest repayment. So we click on uniform P&I, which stands for principal and principal and interest. And there's a repayment, uniform principal and interest repayment at an interest rate of 5% with no IDC financing. So we will click on constant. We will put down 5 because we've been told that there's an interest rate of 5% and there's no IDC financing option, so we'll click on no. So that is it, and we click on save data. We now move on to the next part, which is depreciation. We are told that the project will, the project will depreciate linearly over 30 years. So we click on linear, we put down 30. We click on save. And now we move on to the next section. And our hands-on is telling us that over the lifetime of the project, an external trust fund should be set up to accumulate 1,000 million USD to pay for decommissioning costs. So we'll click on external trust here. Our start year of payment will be 2029 because this is the first year that the power plant is in use. And our last year of payment, because we said that the lifetime is 40 years and we want the external trust fund to accumulate this amount of money to pay for decommissioning costs over the lifetime. So we'll do 2029 plus 40, which is 2069. And our total amount in US dollar, which was given to us in the hands-on, is 1,000 million USD, and total amount local currency is 0 because we were not given anything in local currency. And now we click save, and we will move on to the next section, which is financial manager. So we are told that there are no limits to dividends being paid out, so we'll put in a very high number here, say 999. Equity from 2021 to 2028, the following amounts in local currency are injected, so we will put down In 2021, 400, and then 900, 1,950, 2,250, 2,000, 2,200, 1,850, and 1,400. And now we click on save. So we haven't got any information on new commercial loans or new bonds, so we'll leave these sections blank. We now move on to other financial data, and it says here that spread for short-term deposits, there is an interest rate of -1 over the inflation. So we'll put down -1. And in our hands-on, it says that there's an interest rate of 4% over inflation for standby facilities, so we put down 4%. And short loans is not given, so we will put down 0. And we'll click on save. For shareholders' return data, we are told that there is a 10% approximate average return, so we put down 10 here. Our disposal year is the year 2060, and our discount rate is 8%. And we click on save. Terms of project finance loan is this box over here. And for discount rate, we're told that there's a 6% discount rate, so we'll put 6 down. There's a 12 years average loan term, 1.4 security ratio for loan period, 30 years expected life, 1.6 security ratio for project life, and 2029 first year of debt service. So with that, we click on save data. And I believe that is all of the things that we need to input into FINPLAN to run our case study. And there is nothing else to input according to the hands-on. So we will click on calculate here, and FINPLAN will automatically calculate the results, which you can see here. There are 6 different types of results all in this page. And to double check, let's just click on cash inflows and outflows. So we said that there was a construction period of 8 years. So, and the first year of operation is 2029. So we need to look at investment. And we need to make sure that there are investment for 8 years before 2029. So there is indeed value for 2021, 2022, 2023, 2024, up until 2028, which is correct because in 2029, that is when our nuclear power plant starts to produce electricity. And to double check again, we need to look at sales and ensure that sales only occur 2029 onwards when the nuclear power plant is active. And indeed there are values for 2029 onwards. So we know that we have inputted the right data, and our nuclear power plant is being constructed and being operated at the correct time. So this is just one way to double check it, but there are many other ways to double check the input of your data, which are explained in the hands-on. And this will mark the end of this hands-on 7 video tutorial.